You ever have that feeling? You're looking at a financial report, you see record profits, and you think, man, we are absolutely crushing it, only to find out somehow you're struggling to pay the bills. If that sounds familiar, trust me, you are not alone. Today, we are going to unravel this huge leadership paradox, the massive difference between profit and cash.
Okay, picture this. You're in a leadership meeting. The latest income statement is up on the screen, and it is showing record profits. I mean, high fives are going around, everyone's celebrating. But then, your finance lead kind of clears their throat and says, yeah, that's great, but we have a serious cash crunch. We might actually struggle to make payroll next month. And the room just goes dead silent. So how? How can you be so profitable on paper, but so broke in reality? You know, this might be one of the single most important questions a leader can ask. So let's find the answer.
All right, to get to the bottom of this, we've got a really clear roadmap. We're going to start with the one big idea you absolutely need to get. Then we'll dive into the key teachings, complete with some real-world examples. After that, I'm going to give you a practical playbook, show you some common mistakes to avoid, and then we'll wrap it all up with a really crucial leadership mindset.
So, the answer to that nail-biting meeting scenario? Well, it all comes down to one discipline. Now, it might sound a little technical, but I promise you it's incredibly practical. It's called working capital management.
Okay, think of it like this. Working capital is the money you need just to keep the lights on and the doors open day to day. It's the cash that gets tied up while you're actually doing your work. And listen, managing this well isn't just some nice-to-have thing. It is the absolute key to your organization's resilience. This is the battleground, right? It's where your cash either gets trapped and suffocates your mission or gets freed up to fuel your growth. And this quote just hits the nail on the head. An income statement, it can show a profit, sure, but that's really just an estimate. It's an accounting of transactions. It doesn't tell you if you have the cold, hard cash in the bank to pay your people, your rent, or your suppliers. That's why they say profit is an opinion, but cash is a fact. And as a leader, you've got to live in the world of facts.
Okay, so how do we actually get a handle on this? Well, we have to follow the money. We need to understand the journey that cash takes as it moves through our organization. And that journey has a name. It's called the cash conversion cycle.
You know, think about your own organization for a second, right? The cycle always starts with cash. First, we use that cash to buy or create something. That's our inventory. You know, for a manufacturer, it's lumber or steel. For a ministry, it might be t-shirts or supplies for an event. Then we sell or deliver that thing, and we create an invoice or maybe a donation pledge. That's our accounts receivable. That's just a fancy way of saying money that people owe us. The cycle only, and I mean only, completes when we collect the cash from that receivable.
And right here, this is where it gets really powerful for you as a leader. The amount of time it takes to complete this whole cycle, from the second you spend cash to the second you get it back in your hands, that is your cash conversion cycle. And the goal is simple. Make that cycle as short as humanly possible. A short cycle means less cash is tied up and your organization is way healthier. A long cycle? Well, that just means your cash is trapped.
But here's the great news. You are not powerless here. Not at all. You have 3 powerful levers you can pull to control this cycle. Lever number 1 is accounts receivable, which we measure in something called Days Sales Outstanding, or a DSO. Simply put, that's how long it takes for you to get paid. Your second lever is inventory, measured in Days in Inventory, or DII. That's how long your stuff just sits around before it's sold. And the third lever? That's accounts payable, measured in Days Payable Outstanding, or DPO. This one's all about how much time you take to pay your own bills. So how do these 3 levers all fit together? Well, it's actually a pretty simple formula, but it has huge implications. You take the time your cash is stuck in receivables, your DSO. You add the time it's stuck as inventory, your DII, and then you subtract the breathing room you get from your own suppliers, your DPO. And what's left? That is your cash conversion cycle. So your mission, should you choose to accept it, is to make that number as small as possible by pulling these 3 levers. I know this can still feel a little abstract, so let's make it super concrete with a couple of real-world examples. All right, first, a business example. Imagine a furniture maker whose sales are just exploding. I mean, the income statement looks incredible. But to meet all that new demand, they had to buy a ton of lumber. That's a huge amount of cash tied up in inventory. And on top of that, their new, bigger clients are taking 90 days, sometimes more, to pay their bills. That's a sky-high DSO. So all of a sudden, they're this wildly successful company that can't even pay its lumber supplier. This is a textbook case of a company being profitable all the way into bankruptcy.
They weren't failing because of a lack of success, they were literally drowning in it, and it was all because their cash conversion cycle just completely spun out of control.
Now let's look at a ministry example. Think about a youth camp. Way back in April and May, they have to pay for everything up front. The venue rental, all the t-shirts, you name it. That's all prepaid inventory. But the donations and registration fees that were pledged for the camp, they don't really start rolling in until July. That huge gap between when the cash goes out and when the cash comes in, that is their working capital problem. So what happens? In June, they hit a serious cash crunch and they're scrambling to make payroll for their regular staff, even though on paper their budget for the whole year is perfectly balanced.
Okay, so you get the problem now. The question is, what do you actually do about it? Let's get into the leader playbook.
All right, first, let's say you're in a smaller organization and you don't have a big finance team. You can still make a huge impact with 3 really simple habits. Number 1, just start asking, is our cash cycle getting longer or shorter? Seriously, just putting that question on the table is a massive first step. Number 2, don't just ask for the total amount of money you're owed. Ask for something called an aging report. This is a total game changer because it shows you not just what you're owed, but how long you've been owed it. It separates the people who pay on time from the ones who are dangerously late. And third, you've got to change your mindset. Start treating every bit of inventory like a stack of cash that you can't spend.
And this is why that aging report is so critical. So your overall DSO might look okay, let's say it's 50 days. But an aging report could reveal that half of your customers pay you in 10 days, and the other half are over 90 days past due. The average completely hides a massive, massive problem. That aging report tells you exactly who isn't paying and just how late they are, so you can actually do something about it.
Now, what if you do have a finance team? Your role becomes more strategic. Here are 3 leadership moves you can make. First, drive clarity. Ask this simple question. Who owns DSO, DII, and DPO? A lot of times, sales owns DSO, operations owns DII, and finance owns DPO. Just asking the question creates accountability. Second, take the cash conversion cycle out of the finance department's spreadsheet and make it a key operational metric that your entire leadership team reviews every single month. And third, you need to lead the conversation about payment terms. Yeah, you can improve your cash position by paying your vendors slower, but that's a leadership call, and it has real consequences for those critical relationships.
Okay, you've got the playbook, now let's talk about the traps. Here are 3 really common mistakes that even the smartest leaders make when it comes to cash.
First up is the profit mirage. You know this one by now, right? It's celebrating those paper profits while your cash account is bleeding dry. Second, relying on averages. We've talked about this, but it's so important I'm going to say it again. Averages can lie. That DSO number might look totally fine while the huge customer default is festering just below the surface. And finally, burning your partners. Look, squeezing your suppliers for an extra 30 days of payment might feel like a smart cash move, but it's a short-term win that can absolutely destroy the trust and partnerships you need for the long haul.
All right, let's zoom out for a minute. We've talked a lot about the what's and the how of managing cash, but the why behind it all is just as important. This isn't just about financial mechanics, It's really about the kind of leader you're called to be.
See, managing your working capital well isn't just about the numbers on a spreadsheet. It's a profound act of faithful stewardship. It's about having the foresight and the integrity to count the cost. When you manage your cash cycle well, it means your people get paid on time, it means your commitments to your partners are honored, and it means your mission can move forward with stability instead of just lurching from one last-minute panic to the next. So, where do you start with all this? Look, don't try to boil the ocean. I want to leave you with one simple, super powerful step you can take this week to put this into practice. Sometime this week, I want you to find the right person in your organization and ask them this one question. It's about that first lever we talked about, and it's usually the easiest one to get your head around. Just by asking this question, you start the whole journey. It signals to everyone that you're thinking about cash, not just profit, and that you're ready to lead with real financial intelligence. Hey, thanks for joining us for this explainer. You are now equipped with the financial intelligence you need to lead with real confidence, making sure your organization doesn't just survive but truly thrives. Because now you know the secret. Profit is nice, but cash is king.